I'm Joe Teague. Welcome to Volatility 411. Ahead of tomorrow's critical CPI number, the market is lower. We have the S&P 500 down 60 basis points. The Nasdaq's down over 1%. Not surprisingly, the VIX is higher. Now we're just a hair over 16 as I'm recording this video. Yesterday we touched over 18, so we've seen some big moves up and down in the volatility. The VIX is going low end of the range now, 13. The high end of the range now is 18. It's seemingly like the last week or two we've broken out of this downtrend and we have an upward trend. And we're going to have to watch how this plays out. Now, the leadership has been lost in the market. We've seen the big cap tech carry the rally this year. That's really stalling out right now. We're seeing the semiconductors having a fantastic year. That's stalling out right now. And the rally really widened out and broadened out. But lately, there's been big rotation. I mentioned the S&P 500 is down a lot less than the Nasdaq. We've been rotating out of this big cap tech into more defensive names ahead of this inflation number tomorrow. Now, for me, going forward for the rest of the year, regardless of what this inflation number is telling me, the downgrade in the U.S. debt really had everything to do with the money that's being spent and the lack of appetite to really control inflation. I think that's what the debt was all about. U.S. dollars, are they really going to be worth what they're going to be worth 20 years from now? And so after this inflation number, regardless of what happens, I think looking forward, I'll be looking at oil, I'll be looking at real estate, I'll be looking at commodities, things that people can buy, assets people can buy that are physical, they can hold in their hands. I think that's what people will be looking for. That'll be the trade of 2024. For Equity Armor Investments, I'm Joe Teague.